What's up, you guys? It's been quite a roller coaster this year when it comes to finance. I mean, we've had record unemployment due to the pandemic, and yet somehow the US stock market has reached all-time record highs. Now, you may be wondering, how do these two incompatible things make any sense? How can stocks be a good investment right now if many companies are struggling? Why are investors making money if so many people are unemployed? And what should you do to protect your retirement savings? Alright guys, so in this video we're going to cover all of these topics, but before we do, make sure to tap that like button and subscribe to the channel so that you get updated. Alright Joe, so before we get into the details, let's start with some stock market basics. So the stock market is where people go to buy and sell shares of stock, and the value of a share of a stock goes up if there are more buyers than sellers. So sellers will keep raising the price of a stock as long as buyers keep buying. Now on the other hand, the value of a share of a stock goes down if there are more sellers than buyers. So in this case, the sellers will keep dropping the price until they find buyers. Now, one important thing to keep in mind, Joe, is that the state of the stock market at any given moment is much more representative of the future, not the economy at that exact moment. Another very important thing to remember is that the stock market reflects companies, not individual people. Very important to keep in mind, guys. So if the stock market goes up, that means investors are usually more confident about a good future for those companies. That usually happens when they look into the future and see widespread good news for those companies. Now again, that does not necessarily translate into good news for individual people. Something that's bad news for an individual person might be good news for a company and vice versa. So remember, the stock market operates on what's good or bad for the company, not the workers. If the stock market is going up, then investors are seeing an overall set of good news for companies, even if the news from the perspective of individual workers might be bad. Alright Joe, so the unemployment rate reflects individual people, not the health of companies. Now the unemployment rate is currently quite high and is forecasted to remain high for at least another year or two. Now, areas where the economy focuses on tourism and retail are affected very heavily with unemployment and will remain so until those sectors return to some semblance of normalcy. Now, small businesses, particularly restaurants, bars, hotels, and retail, are struggling very hard right now to stay afloat, and that often means cutting workers' hours and/or wages. Now, small businesses employ half of all U.S. American workers, and they're not reflected in the stock market at all because these are not public traded companies. Now with that being said, if you're wondering why the stock market is doing well while unemployment is quite high, I would say it's due to the Federal Reserve setting and maintaining low interest rates. So let me explain it like this, guys. Businesses will be able to stay afloat much more easily than they would be able to if interest rates were high. So if a business needs to borrow some money, they're much more likely to be able to repay and thrive if they borrow money at, let's say, a 3% interest rate than at a 10% interest rate. So thus, the Federal Reserve publicly committing to keep interest rates low for a while indicates that businesses will be able to borrow money at very low interest rates for the foreseeable future, which means that more businesses will be able to survive and stay afloat during this difficult time. Now, the promise of a virus vaccine on the horizon can be another contributing factor. The stock market doesn't respond well to instability. Several companies are working on a virus vaccine which can have a positive impact on the overall market. Now, a final factor to consider is that while some companies have definitely struggled, other companies have actually done really well during this period. For example, technology companies in particular were in a great position to thrive during an era of social distancing, and they've taken advantage of it, selling hardware and software that has enabled people to continue to communicate and work during these shutdowns and periods of remote work. Companies such as Zoom and even Peloton, who specialize in fitness equipment, have done quite well as many gyms, fitness centers have been closed. The key message to take away, Joe, from all of this is that the stock market is much more concerned with the financial health of large companies than individuals. Also, the stock market is much more concerned with the future than the present. With that being said, even in moments where the present situation looks very economically bad for individual people, the future situation for large companies can still look good, which means the stock market will do well. If you are an individual concern with your investments, I would say hang tight and ride the wave. The best route for almost all individual investors with money in the stock market for retirement is to stick to the plan even through moments of turbulence. You're likely to miss the top of the stock market if you sell right now and miss the bottom when you don't buy again. So my advice to you would be not to worry about the day-to-day stock prices and stick to your overall long-term plan. Historically, the stock market has done quite well over the long run. The key is not to panic and ride the lows and highs. Keep in mind, guys, by consistently investing over the long term, you will end up dollar cost averaging, and this technique has been solid over the long haul. There you guys have it, some information on how the stock market works and why the stock market can do well despite high unemployment. If you found value in this video, please tap that like button and share this video with others on social media. It helps me out a lot with growing the channel. Don't forget to subscribe and turn on the notification bell as I'm posting valuable new content every week. Thanks again for watching, and until next time.